Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Alaizati binti Muhammad Shukri and my number metric is 313299. So for today, I will present the background company. From the company that we choose, there are two companies that we have choose, Warisan, TC Holding Berhad and also ZHENG Berhad. So first, let me introduce our first company, Warisan TC Holding Berhad. So this company founded in 1997 at Kuala Lumpur, Malaysia. So this company is operate as a high diversity investment holding group. They are serve industrial, logistic and hospitality niche. Okay, so this company have some of corporate subsidiaries like Mayflower Car Rental, Mayflower Corporate Travel and also TCIM. So this company involved in car rental, corporate tours, industry heavy machinery and also cosmetic. Okay, next we move to the next company, ZHENG Berhad. So this company is established in 2003 based on Shah Alam, Selangor, Malaysia. This company operate as a premier investment holding company that specialize in fiber-based manufacturing. This company have several subsidiary operation like Quality Hero Corp, Carefil Cotton and also Modern Alpine. This company also robust the processing and the distribution networks throughout the Asia, Africa and Australia.
Hi, my name is Nuria Sumit Basri and my number matrix is 313687. And today I'm going to talk about financial ratio analysis. First is in liquidity ratio, first is current ratio. Based on 2023, Warisan TC Holding Berhad current ratio is 0.90 per 1, meaning that the company had 19 cents ringgit in current assets for every 1 ringgit in current liabilities. Since the ratio is below 1.0, it may face difficulty in meeting short-term obligation. While ZHENG Berhad in 2023 current ratio is 2.57 per 1, meaning that the company had 2 ringgit and 57 cents in current assets for every 1 ringgit in current liabilities. This indicates strong liquidity and ability to comfortably meet a short-term obligation. And in 2024, Warisan TC Holding Berhad improved their current ratio slightly from 0.90 per 1 to 0.92 per 1. However, as the ratio remained below 1.0, the company still faced liquidity challenges in meeting short-term obligation. On the other hand, ZHENG Berhad current ratio decreased slightly from 2.57 per 1 to 2.44 per 1. Despite the decline, the ratio remains strong, indicating good liquidity management and sufficient ability to meet the short-term obligation. And in 2025, Warisan TC Holding Berhad current ratio dropped significantly to 0.33 per 1, meaning the company had only used 33 cents ringgit in current assets for every 1 ringgit in current liabilities. This indicates very weak liquidity and a high risk of being unable to meet the short-term obligations. While ZHENG Berhad current ratio improved to 2.98 per 1, reflecting a strong liquidity position and enhanced ability to meet the short-term obligation. And next is a liquidity ratio and the quick ratio. In 2023, Warisan TC Holding Berhad quick ratio is 0.56 per 1, meaning that the company had only 56 cents ringgit in liquid assets for every 1 ringgit in current liabilities. As the ratio was below 1.0, the company may face difficulties meeting short-term obligation without relying on inventory sales. Meanwhile, ZHENG Berhad quick ratio is 1.87 per 1, meaning that the company had used 1 ringgit 87 in liquid assets for every 1 ringgit in current liabilities. This indicates a strong liquidity position and the ability to meet the short-term obligation using only liquid assets. Next, in 2023, Warisan TC Holding Berhad quick ratio decreased to 0.43 per 1 from 0.56 per 1 in 2023, indicating a weaker liquidity. With only 40 cents ringgit in liquid assets for every 1 ringgit in current liabilities, the company may rely on inventory sales or external financing to meet the short-term obligations. On the contrary, ZHENG Berhad quick ratio was 1.65 per 1, slightly lower than 1.87 per 1 in 2023, but still above the 1.0 benchmark. This reflects a strong liquidity position and sufficient liquid assets to cover short-term liabilities. In 2025, Warisan TC Holding Berhad quick ratio improved slightly to 0.53 per 1 from 0.43 per 1 in 2024. However, it remained below 1.0, indicating insufficient liquid assets to fully cover the short-term liabilities. ZHENG Berhad, on the other hand, their quick ratio increased to 2.01 per 1 from 1.65 per 1 in 2024, showing excellent liquidity management and a strong ability to meet the short-term obligations. Next, we enter into activity ratio in total asset turnover. In 2023, Warisan TC Holding Berhad total asset turnover ratio is 0.66, meaning that every 1 ringgit in assets generated 66 cents ringgit in sales. This indicates lower efficiency in utilizing assets to generate revenue. While ZHENG Berhad total asset turnover ratio is 0.68, meaning that every 1 ringgit in assets generate is 98 cents in sales. This reflects higher asset utilization efficiency and a stronger ability to convert assets into revenue. Moving on to 2024, Warisan TC Holding Berhad total asset turnover ratio decreased to 0.63 from 0.66 in 2023, meaning that every 1 ringgit in assets generated is 63 cents in net sales. This indicates lower assets utilization efficiency. In the same year, ZHENG Berhad total asset turnover ratio increased to 1.02, meaning that every 1 ringgit in assets generated 1 ringgit and 2 cents in sales. This reflects improved asset efficiency and a stronger ability to generate revenue from its asset base. In 2025, Warisan TC Holding Berhad total asset turnover ratio increased to 0.70 from 0.63 in 2024, meaning that every 1 unit in assets generated 70 cents in sales. This indicates improved asset utilizations. On the other hand, ZHENG Berhad total asset turnover ratio rose to 1.08, meaning that every 1 unit in assets generated 1 ringgit 8 cents in sales. This reflects excellent assets management and operational efficiency. And next, lastly, we are getting into account receivable turnover that fall also into the activity ratio. In 2023, Warisan TC Holding Berhad accounts receivable turnover of 3.33 times, indicating a moderate ability to collect credit sales during the year. In the same year, ZHENG Berhad account receivable turnover of 5.12 times, showing more frequent collections and more efficient credit management. Next, in 2024, Warisan TC Holding Berhad accounts receivable turnover slightly decreased to 3.30 times from 3.33 times in 2023, indicating a minor decline in collection efficiency and slightly slower cash in collection. In the same ratio, ZHENG Berhad account receivable turnover increased to 5.20 times, showing improved and faster collection in receivables. And lastly, in 2025, Warisan TC Holding Berhad account receivable turnover decreased to 3.24 times, indicating a slight decline in collection efficiency, even with higher sales. On the other hand, ZHENG Berhad in 2025 account receivable turnover slightly declined to 5.10 times, but remains significantly higher than Warisan TC Holding Berhad, showing a strong and efficient receivable collection.
Hi, I'm Nur Aisha Amna binti Ismail, matrix number 313496, and for the next ratio is profitability ratios, and we start with profit margin on sales. In 2023, Warisan TC Holdings Berhad had a profit margin on sales of negative 0.53%, and implying that the company suffered a net loss of 0.53 ringgit for every 100 ringgit of sales made. This indicates not only poor profitability but also that costs and expenses went beyond the revenue. But for ZHENG Berhad had a profit margin of 2.39%, which means the company netted 2.39 ringgit in profit for every 100 ringgit of sales. This serves as an indication that the management of ZHENG Berhad was able to keep their costs under control and be profitable during the year. In the year of 2024, we can see that Warisan TC Holdings Berhad profit margin sharply fell down to negative 2.84%, and illustrating a worsening in its level of profitability if compared to 2023, and the firm incurred losses 2.84 ringgit for every 100 ringgit of turnover, which implies that the company either faces higher costs or experience a drop in the efficiency of its operation. At the same time, ZHENG Berhad's profit margin went down from 2.39% to 0.35%, meaning that while the firm was still earning a profit, its income was quite a bit lower than the year before. Despite the reduction, ZHENG Berhad still managed to achieve a better level of profitability when compared to Warisan TC Holdings Berhad. In 2025, we can see that Warisan TC Berhad's profit margin took an even deeper plunge, reaching the negative 9.46% mark, which is the lowest in the entire 3-year span. This translates into the company posting a loss of 9.46 ringgit for each 100 ringgit of sales, which indicates a very serious problem in profitability. However, ZHENG Berhad also had a negative profit margin at negative 2.54%, which means the company reported a net loss in 2024 as well. But the quantum of the loss was smaller against Warisan TC Holdings Berhad, demonstrating better financial performance in relative terms, given to the result was negative. For the next profitability ratio is return on common shareholders' equity. In 2023, Warisan TC Holdings Berhad had a negatively return on common shareholders' equity (ROE) of negative 0.93%. This shows that the company does not have any profit to make a return on shareholders' equity fund, but rather has a loss of 2.4 million ringgit. We can see that ZHENG Berhad had a positive ROE of 3.34%, showing that the company had earned its investors the sum of 6.7 million ringgit. ZHENG Berhad has been doing better by making a return on its equity fund, while Warisan TC Holdings Berhad has not. In 2024, we can see that both companies' profit had dropped. Warisan TC Holdings Berhad return on equity was plummeting to a deeply negative 5.42% as its net loss of 14.1 million ringgit had grown, making it harder for the company to handle costs and generate revenue. Though ZHENG Berhad was still making money, its ROE also plunged drastically to 0.53%. Because of the big net income drop it had from one year for the next, while ZHENG Berhad was doing better by not going into the red, both of the company were experiencing financial difficulties at that time. In 2025, both businesses were hit hard financially as they unexpectedly both posted losses. A further deterioration in Warisan TC Holdings Berhad results caused it to report an extremely low ROE of negative 25.67%, mainly resulting from a huge net loss of 25.67 million ringgit compared to its decreasing equity base. For WANG Berhad also ended up with a loss due to a negative ROE of negative 4% because of a net loss of 7.6 million ringgit. At the very least, Warisan TC Holdings Berhad was severely financially troubled, even more than WANG Berhad, for preserving or growing shareholder value well, or hardly at all by the end of this period. For the last ratio is leverage ratio, and we start with debt to asset ratio. In 2023, Warisan TC Holdings Berhad had a debt to asset ratio of 0.63, which showed that 63% of the company total asset were financed by debt, with the rest of 37% funded by equity. Then again, for WANG Berhad kept a relatively lower ratio of 0.33. Only 33% of the company assets were utilized through debt. Because of this, at this point, WANG Berhad had a safer financial structure with less risk compared to Warisan TC Holdings Berhad. By 2024, Warisan TC Holdings Berhad ratio was raised to 0.7, reflecting a mounting dependency on debt issuance as the company's liability increased at a much faster pace than its asset. Meanwhile, WANG Berhad ratio remained the same at 0.33, even though there was a minor shrinkage in the total size of its balance sheet. So while Warisan TC Holdings Berhad was becoming more heavily leveraged and possibly riskier, WANG was concentrating on keeping a stable and reasonable level of debt for its assets. By 2025, the two companies' financial journeys become even more different, with Warisan TC Holdings Berhad debt to asset ratio increasing to 0.78, which means that almost 80% of its assets were financed through borrowings. However, WANG Berhad managed to bring down its debt to equity ratio to 0.27 due to a major cut in its total liabilities. After these 3 years, WANG Berhad reached a stage of a greater strength and security about its solvency, while Warisan TC Holdings Berhad, on the contrary, was exposed to increased financial risk because of its high and rising leverage. Next leverage ratio is debt to equity ratio. In 2023, Warisan TC Holdings Berhad reported a debt to equity ratio of 1.73, which basically means that the company used 1.73 ringgit as debt for financing for every 1 ringgit of equity. So, as per this figure, the company is in quite stretch of a situation when their main source of financing is borrowed funds rather than the owners investing in the company. Whereas WANG Berhad is quite a bit different, as they have kept their debt level quite low with the ratio of only 0.49. Which means their debt is less than half of their total equity. So at this point, WANG Berhad was a lot better off financially since they were depending basically on internal equity rather than taking up external debts for running their businesses. In 2024, the ratio of Warisan TC Holdings Berhad got increased a lot to 2.33 as the company's total liabilities went up, whereas its total equity came down. This big jump indicates deterioration of the company's solvency positions and that the investors are exposed to more financial risk. At the same time, WANG Berhad maintained its ratio of 0.49, which reflects financial stability in its management. The divergence between the two companies indicates that even if WANG Berhad were low risk, Warisan TC Holdings Berhad got more and more indebted related to its capital. In 2025, Warisan TC Holdings Berhad debt to equity ratio jumped to 3.59, showing a really aggressive and ideally hazardous level of leverage where debts are more than twice the equities. Such as condition sure points out the risk of default if earnings were to change. However, WANG Berhad did even better by bringing down its ratio to 0.37 by cutting its debt more than its equity decrease. WANG Berhad finished the year with a very healthy financial structure, but Warisan TC Holdings Berhad seems to be highly leveraged and financially quite weak. That's all from me. Thank you. Moving on, I'll talk about comparative analysis. So we have liquidity ratio. Liquidity ratio is divided into two, which is current ratio and quick ratio. For the current ratio, ZHENG Berhad maintained a stronger liquidity position throughout the year. Current ratio remained above 2.0 and showing a strong ability to meet short-term obligation. Meanwhile, Warisan TC Holding Berhad recorded ratio below 1.0 and declined significantly in 2025. So these indicate a weaker liquidity and reduced financial flexibility. So in the conclusion, ZHENG Berhad showed a better liquidity management and a stronger short-term financial stability rather than Warisan TC Holding Berhad. Moving on, we have quick ratio. So ZHENG Berhad maintained a healthier quick ratio than Warisan TC Holding Berhad. Its quick ratio maintained above 1.0 and indicate a strong ability to make short-term obligation without relying on inventory. So meanwhile, for Warisan TC Holding Berhad, they recorded a quick ratio below 1.0 and it showed a weaker liquidity. So this decline in 2024 suggests both company had fewer liquid assets relative to current liabilities. So in a conclusion, ZHENG Berhad demonstrate a stronger short-term liquidity and financial strength than Warisan TC Holding Berhad. Next, we will talk about activity ratio. Activity ratio is divided into two, which is total asset turnover and account receivable turnover. So for total asset turnover, ZHENG Berhad consistently recorded a higher total asset turnover rather than Warisan TC Holding Berhad. So its ratio improved from 0.97 to 1.08 and show more efficient use of asset to generate revenue. Meanwhile, for Warisan TC Holding Berhad, they maintained a lower ratio ranging from 0.63 to 0.70 and indicate a weaker asset utilization. And although Warisan improved in 2025, its efficiency remains significantly lower than ZHENG. So in conclusion, ZHENG Berhad demonstrated stronger asset management and better operational efficiency throughout the 3-year period. Next, we have account receivable turnover. ZHENG Berhad consistently recorded a higher account receivable turnover ratio than Warisan TC Holding Berhad. So its ratio maintained stable at around 5 times per year, indicating a faster collection from customer. Meanwhile, for Warisan TC Holding Berhad, they recorded a lower ratio of around 3 times per year and suggesting a slower collection of receivable. So this shows that ZHENG Berhad have more effective credit control and cash flow management. So in a conclusion, ZHENG Berhad demonstrate a better receivable management and stronger liquidity due to its faster collection of customer. Profitability ratio, we have profit margin on sale and return on common shareholder equity. So for profit margin on sale, ZHENG Berhad recorded a higher profit margin than Warisan TC Holding Berhad throughout the year. So it remained profitable in 2023 and 2024 and show better cost control and profitability. Meanwhile, Warisan TC Holding Berhad experienced declining profit margin and recorded losses from 2024 onwards. But in 2025, both company reported negative profit margin, but Warisan's loss was significantly larger. So in conclusion, ZHENG Berhad demonstrate a stronger profitability and most effective cost management, while Warisan TC Holding Berhad faced greater challenges in generating profit from sale. Next, we have return on common shareholder equity. ZHENG Berhad recorded a stronger return on equity than Warisan TC Holding Berhad throughout the year. ZHENG Berhad was more effective in generating return for shareholder investment, while Warisan TC Holding Berhad experienced negative ROE over the 3 years. So this indicate a weaker financial performance and efficiency in utilizing shareholder equity. And although both companies faced declining performance and negative in 2025, ZHENG Berhad recorded a much smaller loss compared to Warisan TC Holding Berhad. So overall, ZHENG demonstrate a more stable management of shareholder equity and better profitability performance. Lastly, we have leverage ratio. First, we have debt to asset ratio. Warisan TC Holding Berhad consistently recorded a higher debt to asset ratio than ZHENG Berhad from 2023 to 2025. So this indicates that Warisan TC Holding Berhad rely more heavily on debt financial to support its operation and asset. So the increasing debt of Warisan TC Holding Berhad reflect higher financial leverage and greater financial risk over the 3 years. So in contrast, ZHENG Berhad maintained a lower and more stable debt ratio, and it showed a better debt management and stronger financial stability. So by 2025, ZHENG Berhad further reduced its dependency on debt and indicating a healthier financial position and lower repayment risk. Next, move to the debt to equity ratio. Warisan TC Holding Berhad consistently recorded a much higher debt to equity ratio than ZHENG Berhad. So this showed that Warisan TC Holding Berhad rely heavily on debt financing compared to shareholder equity. So it result in higher financial leverage and repayment risk. So this continuous increase in Warisan TC Holding Berhad ratios indicate growing dependence on borrowing and weaker financial stability. So in contrast, ZHENG Berhad maintained a lower and more stable debt to equity ratio. So it reflects a better capital structure and stronger financial management. So by 2025, ZHENG Berhad further reduced its debt dependency, indicating lower insolvency risk and healthier financial position.
Assalamualaikum, my name is Nur Rosarin, number matric 312867. Next, I will present the trend analysis of ZHENG Berhad and Warisan TC Holding Berhad. For the current ratio, ZHENG Berhad showed a stable and improving trend with strong short-term liquidity. In contrast, Warisan TC Holding Berhad recorded a declining trend and higher cash flow risk. Overall, ZHENG Berhad performed better. For the quick ratio, ZHENG Berhad showed a fluctuating trend but maintained a strong liquid asset position. Meanwhile, Warisan TC Holding Berhad remained weak throughout the 3 years. Therefore, ZHENG Berhad demonstrate better liquidity management. For total asset turnover, ZHENG Berhad showed a improving trend, indicating more efficient asset utilization. In comparison, Warisan TC Holding Berhad recorded lower operational efficiency. For account receivable turnover, ZHENG Berhad maintained stable collection efficiency and strong credit management. On the other hand, Warisan TC Holding Berhad showed slower customer payments and weaker collection performance. For profit margin on sales, both companies experienced declining profitability. However, Warisan TC Holding Berhad recorded greater financial losses compared to ZHENG Berhad. For return on shareholders' equity, ZHENG Berhad showed declining returns, while Warisan TC Holding Berhad recorded negative returns throughout the period. Overall, One ZHENG Berhad performed better. For the debt to asset ratio, One ZHENG Berhad showed improving debt management and lower financial risk. In contrast, Warisan TC Holding Berhad became increasingly dependent on debt financing. For the debt to equity ratio, One ZHENG Berhad maintained stronger financial stability with lower reliance on debt. Meanwhile, Warisan TC Holding Berhad show higher financial leverage and risk. In conclusion, One ZHENG Berhad generally outperformed Warisan TC Holding Berhad in liquidity, activity, and leverage ratios, while both companies face declining profitability.
Moving on to the final part of our presentation, I will share some suggestion or recommendation to both companies. So, first we go through to the suggestion for Warisan TC Holding Berhad. So, this company must improve their account receivable collection process and also manage their inventory efficiently. So, from this suggestion, I believe that this will make the company more easier to bring in cash faster. So the second one is this company must also avoid taking additional bank loans, and they can consider any or another methods like equity financing. This will help them to reduce financial risk. Okay, next, for One ZHENG Berhad, we also recommend two steps. So for the first one is, they must improve cost management by controlling operating and production costs. This will help them to reduce the unnecessary expense. So the second one and the last one is, this company must improve their pricing strategies, increase productivity, and get the cost-effective raw material.